has been under pressure this week. That's the entire Nifty IT space. Let's put the spotlight on that sector. Macquarie believes that demand for lateral hiring is likely to pick up in FY26, as other lead indicators such as hardware Capex are trending higher as well. To decode key trends in the sector and the wage hike outlook, we have with us Ravi Menon, IT and technology analyst at Macquarie Group. Ravi, hi, welcome to the show. Well, the news was with regards to Accenture delaying their promotion cycle to June from December. And, after skipping some amount of salary hikes as well. So that probably deterred a lot of sentiment in the market. What is your reading of it?
I wouldn't worry too much about it. See, definitely not a bullish indicator, that I agree. But I don't think it's necessarily very bearish either, because it's not a one-time change this year. Right? They are saying that this is going to be a permanent change because if you're thinking about a December cycle promotions, you need to start planning for it in October. There is too much volatility now. I think in October, you have really not much idea about next year's spending plans. As we saw last year, right? People were expecting a rate cut in May. That hadn't happened. So, we had actually initially been expecting that this year spending will start picking up in June. And with the rate cut that's happened only in September, now it looks like that's come too late for an improvement in spending this calendar year. So it's only next year. So I think it makes sense to align to a June promotion cycle for them. If you look at what Indian firms have done, look at Wipro, for instance. Last year, they had deferred their pay hike from the usual June cycle to December. This year, they've actually moved it up a little bit. They're doing it in September. They've also reportedly given a wage hike that's better than what they've given last year. So I would think that that indicates that at least Wipro is expecting a better outlook for next financial year. And we agree, and is starting to pick up. We're seeing somebody, like you already mentioned, the hardware Capex that started picking up. Channel checks also says that conversations with clients are improving. So there is a lot of activity. We hope that will translate into deal bookings in Jan to March and into strong revenue growth by Q1 of next fiscal. That's April to June, calendar year 2025.
So in light of that, what do you think would be, you're talking about Wipro, you did name that, but what are the other, top line IT companies, the frontline IT companies that you have your views on?
So TCS is our topic in the sector, followed by HCLTech, then Wipro, then LTI Mindtree. We are neutral rated on Infosys and negative Tech Mahindra, which we have an underperform on. So TCS, we think, offers the broadest portfolio. Valuations we think are reasonable given their strong free cash flow conversion. They also don't have any balance sheet risks. Unlike what we see at Infosys, we think, earnings volatility occurs there. We've seen now 3 quarter fours where Infosys has but below expectations on revenue and margins. And we think that's related to a lot of large deals that they've taken on where they carry a lot more risks. And they're not used to doing that, unlike TCS and HCLTech, I think, which have been doing large deals for a long time and have internalized that risk management capability very well. And we also see that manifested in higher unbilled DSOs for Infosys compared to TCS and HCLTech, where that's pretty steady and much lower.
Okay. Well, I just wanted to get more details about why and where and which segments do you think that demand is looking better for when it comes to Wipro?
So Wipro particularly, because since their Capco acquisition, we think they should have a better win rate in BFSI. BFS is actually expected to be the first sector where I think we should see pick up in demand, especially in North America. And even in the last call, Wipro management had spoken about how they're seeing an improvement in North America BFSI. We've seen that in the numbers as well. Europe BFSI is still not doing so well, but we hope that will also come back to good growth next year.
Right. Outside of, the wage hike related issues and the sort of uncertainty, your call on the IT pack, what is it fundamentally based on? Is it a valuation thesis right now, or are there opportunities for growth and perhaps in some cases higher growth than earlier as well? Do you see that? Is it value versus growth? Just wanted to understand that.
I think it's both really. We see much stronger growth compared to what we saw pre-COVID. We don't agree with most people's thesis that what we saw during COVID was just pent-up demand. We think that we will see a very strong enterprise technology refresh, and that will mean much faster growth for services companies compared to, say, the 2016 to 2020 sort of period. So we should see hardware, big changes happening there. So I think the good profit pools in this tech cycle is going to be in hardware and in services, because off the shelf there is really no software available to take advantage of all the new hardware that is to offer, especially in AI. So I think services companies will be required to create a lot of solutions for customers.
Okay. Can you tell us a little more about your mid-cap pick, Persistent?
So Persistent, again, we see that as very well placed because they have no legacy. So they are in a right position to play disruptor. They also, I think, have point solutions to get into new customers. They've deployed a lot of sales personnel over the last couple of years. To some way, I would say, over-invested deliberately, so that when the demand picks up, they are in a good position to get that sales and marketing leverage and get that into their operating margins. So we expect to see that play out with good margin improvement over the next year. We also think that our estimate of 20% plus growth for next year for Persistent is fairly conservative, because their sales team today is 25% at least bigger compared to FY23. So we think that they can potentially add even more revenue than that year if demand comes back, which we expect it will.
Right. You briefly mentioned the two letters that everyone's talking about, that is artificial intelligence. You said AI. From an Indian IT company standpoint, I wanted to know what could the revenue opportunity be for companies that are developing Gen AI based products/services? And secondly, how could this impact their costs? And of all the companies that you track, which one is best placed to benefit from this, and which gets most impacted from this?
Right. I would think that BPO firms probably get most impacted because that, especially customer service, is what people are talking about as the first area where AI can be used. We've already heard some companies in the US which have used that to reduce their call center volumes a lot and improve customer satisfaction as well. But none of the large cap IT services firms really do too much customer support. Perhaps with the exception of Tech Mahindra, which I think does customer support for its telecom customers. So I don't really think there is much disruption near term for Indian IT services firms on the revenue side. It's more opportunity because to help enterprises adopt AI, there is everything from setting up specialized hardware to modernizing their data. So there is a lot of services work that I think will be required over the next 2-3 years at least, at a minimum. And for many large enterprises, I think it can be 2-3 years just to get ready for AI adoption, and then a lot of applications to build on top of that. So we're looking at least 3 to 5 years of strong demand, I think.
Right. The reason why I asked you that was because this week earlier we spoke with the management of Happiest Minds, and they did have a bit of an AI startup that they did, just about a year ago, and now it's ramping up quite significantly. They are in active talks with a lot of clients. Do you track that space? Do you track Happiest Minds? What's your call?
Happiest Minds is a firm that I do not track very closely. We don't cover it. So Persistent, if you look at, they've launched something called Sasva, which is an AI-based solution to help roll out updates for their customers much faster. So there is productivity benefit, but that actually opens up. If you look at TCS, they've rolled out a legacy modernization program using AI, saying that solution accelerates us, compared to what would take 10 years earlier, which nobody actually would sign off on. Today, that's been shortened down to 2 or 3 years. So yes, notionally you might think, isn't that actually negative? But fact is that with a 10-year of effort, no client would take the risk or the cost to actually carry out these programs. So that legacy modernization is now finally an opportunity that might open up over the next couple of years.
Okay, all right, Ravi, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving your view on the IT space. Well, for the